right. So Robin, listen, I know this is a little bit of a different format for us. So welcome to the LinkedIn Live. Thank you so much for taking the time to go ahead and join me today. Before we go ahead and get started, I guess we're right at the top of the hour. I know it's people's work day, so we want to be as respectful of everyone's time as possible. I'd love to just go ahead and have you introduce yourself, and I'll do the same, and then we'll just jump right into the content.
That sounds good. So Jason, thanks for wanting to do this with me today. I'm Robin Garrison. I have been in the industry for about 15 years now, working for MSBs, money transmitters, banks doing bank as a service programs for the last 8 years. And I've built about 4 bank as a service programs at this point. Some of them more robust, some of them more scaled back. One of those you and I actually built together, which I'm excited to talk a little bit about that journey today. But it's certainly been a very interesting couple of years, having been doing this since before, this was this with bank as a service, watching the evolution. And so I am excited to talk to you about it.
Yeah, very excited, very excited. So let me go ahead and introduce myself as well. Jason Fitch. I've been in the payments and fintech space for nearly 2 decades. So don't be fooled by the young demeanor here. I've been in the industry for a while. But like you, I've been in the space for a while. I cut my teeth in the merchant acquiring space. So before fintech was fintech, right? It was about payments and money movement. And that's really where I kind of built my career. The last about 6 or so years, I've been focused in the fintech and banking as a service card issuance industry. So having worked with some major brands out there, most recently Cross River Bank, helping lead some of their business development efforts. This is a very, very interesting space. It's one that, I think really is incredibly transformative. And, Robin, I have to credit you. I remember when I came on at Main Street, I had a conversation with you about fintech. You said, listen, do it. This is where the world is going. And so I made that choice and I haven't looked back. So, it's been very exciting. So, yeah. Anyway, thank you so much for joining. And let's go ahead and jump right into the content. So the topic today, right, is the digital banking blueprint, crafting compliant partnerships for banks and fintechs. I think before we kind of jump into, why I wanted to talk about that topic, I really want to just kind of, really hammer home why this is an important discussion, right? So when you think about, all of the different players within this space, whether it's the business development folks who work for the banks or these really excited CEOs who have created these transformational products, at the end of the day, there's always 2 sides of the house that really need to be spoken to. So Robin, one of the reasons I wanted to have you on the call, you talked about all the programs that you played a part in building. One thing that you didn't mention is the compliance side, right? And, how compliance is essentially a gatekeeper for those partner banks that are the really big engine behind these fintechs that have these transformative ideas. So what I wanted to do is really just have a discussion around, how to craft partnerships that are going to be valuable for this space, that are going to be win-win situations for not only the bank, but also the fintech, and how to be able to grow and have some sustainable growth. So yeah, anything to add there, Robin?
No, I think you and I could talk about that. And we have talked about that for hours and hours and hours and hours. So I think we're going to have a lot to cover.
Yeah, for sure. So listen, I tell you what, I'm not going to bore everybody with stats, right? But there's something I actually want to just kind of bring up. And this is really kind of on the bank side, right? And why banks should care about this. So the global fintech market, right, in 2023 was valued at roughly about 295 billion. Once the numbers for 2024 are kind of, settled in, we're estimating that those final numbers for 2024 will come in around 340 billion. By 2032, right, we're estimating that the global market for that is going to be over $1.1 trillion. So if you're a bank, right, and you're starting to think about, hey, how do I drive revenue? And how do I make sure that my bank is still staying relevant and being able to keep pace with where the economy and where the market is going? How do you do that without moving into the fintech space?
I mean, this That's the question, right? I think that's why we see so many of these smaller banks get into this space, which one of the reasons why you and I have continued to be friends and colleagues over the years is because we both are very, very passionate about small banks
Of
and medium
course.
banks, right? We love the idea that these small community banks, which are truly they're serving their communities, and it's such an important role. And in order to get access to services for a lot of people, they do need these small community banks, and they're being completely shut out.
100%.
And they're serving a lot of minorities, a lot of underbanked individuals. I mean, it's so critically important that this part of banking stays alive. So,
Yeah.
we a lot of conversations with CEOs and CFOs, just had one maybe 2 weeks ago that's like, hey, we want to continue to serve our communities, but we can't get the deposits we need to grow. We're getting edged out by, the larger banks.
100%. Yeah.
And so I have always been a huge proponent of these small banks and medium-sized banks getting into this space. But, the flip side of that, right, is the compliance burden for this type of business is pretty high, right? There's a pretty big barrier to entry.
Yeah, no, exactly. And we're going to absolutely dive into that, right? I mean, to your point, fintechs in general have really kind of revolutionized access to the financial services, right? They democratized finance, if you would. And so whether you're a gig worker, a member of a marginalized community, small business owner looking for access to capital, a service industry employee, right? Fintech has really kind of created an ecosystem that allowed some of these people who were previously kind of shut out of the financial market to be able to join in a very significant way, which is why you see the growth of this market over the course of the last several years. It's always fun, right? When I talk to family and friends about what I do, and I talk about fintech, and they're like, make it make sense. And essentially, I'm like, listen, there's no school to go to be able to study fintech, right? Because this is an industry that we're still, I think, kind of building while we're flying the plane, if you would. But ultimately, what we see is the impact that it's having, and we just have to figure out how to put the appropriate guardrails around it, so that we can keep such an important part of our economy moving forward. These last couple of years, as we started to see kind of a slowdown in fintech, that negative impact was felt, throughout the industry, right? Whether it's from venture capital raising, whether it's from, banks being able to drive revenue and keep these programs up. I know personally two or three, really strong fintechs that raise, north of 8 figures, that have had to shut down over the course of the last 2 years, mainly because of issues that evolved around their actual partner bank relationships, and those partner banks having to exit the space. So yeah, a lot to discuss there. Another thing that I think is very important, and I want to jump on this, is, I think we're in an age of transparency and social responsibility, right? You talked about some of these smaller banks, and I have an incredible passion for them. Right now there's about 3,500 community banks in the US. Out of those 3,500 banks, about 150 plus of those are what they consider to be MDIs, or minority depository institutions. And then you have roughly about another 22, I believe, that are African American owned banks, right? So you think about those 150, and then you think about the 3,500, and you say, well, how do those banks compete with some of these really big players out there? When you have, some of the larger traditional, retail establishments kind of coming in and eating up market share. And the answer is to play in this space, right? My previous employer, which, I alluded to earlier in the call, I think about where they were at in 2008 and where they are today, and, how they were able to have such incredible growth. And what it was is taking a chance on an industry that really needed them. So yeah, so let's jump right into it, man. Let's talk about the challenges for fintechs, right? And the framework that they need to have in order to be a good partner. So Robin, I kind of want to start with you on this one, right? So, when you are a compliance officer at a bank, and a fintech, regardless of how much they've raised, or, how good of an idea they had, when they came to the bank to become a partner, what were some of the things that you as the bank were looking for?
So, a really, really great question because that changed. We were in a very reactive mode. And when I say we, I'm
Absolutely.
talking about my personal experience, but those of us in this industry, we all talk, we all know each other, we call each other up, we say, hey, what the heck are you doing with fintechs? I don't even know what to do with this. So it's been very reactive for the last few years because one of the things that makes fintech so amazing and wonderful is also one of the things that makes it so challenging, and that is you've got new and innovative products. Well, if you're a bank who has only ever really done regular deposit products, which there's absolutely nothing wrong with standard banking products.
Right.
And you've got a tech walking in the door that says, we are going to completely innovate and revolutionize. And we've got this brand new product. You have no framework for evaluating it. It's not even about, what are the right questions to ask. It's like, what the heck is this? And I think
Yeah.
that's been kind of the problem for the last few years, and it's manifested in, a number of these consent orders and a number of, of the challenges is, you think you have a blueprint for how to do this. You think you know the questions to ask. And then suddenly it turns out maybe you didn't know, or, there was something different.
So, Robin, are you saying that banks are equally as confused as the fintechs are on how to actually make this thing work?
Absolutely.
Wow.
I equally probably maybe even more so, or those that think they've got it figured out. If you think you've got it figured out in this industry, I'm going to tell you right now, you don't have it figured out. That's one of the lessons I learned the hard way many, many years ago, is the second you feel comfortable, you've already missed something.
Eh,
So
Listen,
it's constantly evolving.
we're in lockstep there, right? So I'll tell you, my role was a little bit different than yours, right? My job was to go out and find the partners for the bank. And then I think on the compliance side of the house, it was really about scrutinizing those partnerships and making sure that the bank would be protected and onboarding and being able to bring that partner on, right? And so one thing that I would always say with every potential fintech money transmitter, didn't matter, that I would sit down and speak with, is I think there are three fundamental pillars to being able to have a successful fintech in this industry. The first is, do you have a transformative idea that's solving a problem? At the end of the day, if you're not solving a problem, you're going to probably tend to fizzle out, right? So there's no shortage of good ideas, but are you solving a problem or are you serving your community? So that's number one. Number two was capital. Every now and again, you have that one unicorn that's able to kind of blow up out of nowhere without any backing. But what we know about this space is it's very expensive, right? Bank partnerships are expensive. Marketing is expensive. Having a quality team is expensive. Being able to invest in the resources that you need, specifically compliance, that is expensive. So capital is always pillar number two for me. But what was probably the most important pillar for me was compliance, right? Having a robust compliance framework to be able to stand your program on. And one of the things that I saw with a lot of the fintechs, and when I started my consulting career, was, hey, listen, we've raised money, we've solved the problem, but we've kind of put compliance to the back burner, right? And because we've made that decision, when we had to go to our partners and talk about, how we could bring revenue to their organization and be a good partner for them, when they had to cross that regulatory bridge, they didn't know where to go, right? And so that's one of the things that I think we really have to kind of highlight is how a fintech should go about building out a compliance program when resources have to be set aside for other parts of it. Do you have any thoughts around that?
Yeah. I think that the word you use, partnership, is critical here. 8 years ago, when you and I were first starting on this journey together, and we're sitting there talking about, okay, well, we need a questionnaire, we need something, we're going to make these fintechs apply, we're going to make them go through this process. And the fintechs didn't like it, right? They're like, what do you mean apply for a bank account, get all this stuff? And we really struggled. Do you remember this? You and I really struggled about what were the right questions to ask, how do we even
100%. Yeah.
fintechs. And the fintechs we were talking to, their reaction to it was, get out of my business, I'm not going to answer your questions. And I think that has changed a little bit now. Obviously, a lot's happened in the last 8 years, but there's still a bit of that I see all the time. And as a fintech, what you really need to understand is your bank's probably figuring it out with you.
Yeah.
And it's not as simple as walking in and just applying for a bank account. Being transparent, not only at the onboarding phase, but as things go on and things
Yeah,
change, want to develop new products, approaching your bank as partner is so absolutely critical. But that's not reflexive for a lot of fintech founders. These are tech creators. These are people that, they've built an app. They think it's really cool. They've got this really great idea. They don't want to engage in that type of, it's almost like splitting open your chest and letting someone kind of like,
exactly. No, no, they don't want to be exposed, right?
no.
Listen, I think, one of the things that really kind of happened when banks started to kind of take on this, right? Rather, and really it started in the MSB space, right? Just being able to move money. The banks kind of took on a lot of that regulatory compliance burden, if you would, and then really directed to fintechs on how to handle it. But the reality is, I think in the new environment that we're in, is fintechs need to realize that they actually need to shoulder that exact same burden, right? So when it comes to BSA, AML, KYC, when you are doing these things for your program, you need to not only be able to meet the bank standards, right? But I think the goal should be for every fintech that's partnering with the bank to be able to meet the same standards that the banks are required to keep, right? So for a fintech to be a good partner to a bank, they need to understand, hey, what level of scrutiny are you as a bank going through to be able to onboard a client like myself? And how am I going to be able to address that and go above and beyond so that when you think of me as a safe partner. So there you are more willing to invest in my success and you're more willing to be able to open up your incredible suite of products because I trust that if you're leveraging my license, I being the bank, right? We having the ability to be able to grow and, not have to worry about one of these, you know, big regulatory bodies coming in and really kind of pulling the emergency brake on the program.
Yeah, yeah. And what we saw over the last few years was frankly a race to the bottom, right?
Yeah,
How many
absolutely.
conversations we have with fintechs where they're like, I'm picking this bank partner because they didn't ask questions, because they just
100%.
because they're cheaper, because they do this. And what happened? How many fintechs have we seen go under in the last year because they lost their bank sponsor?
All of them, all of them.
I
And
mean,
that's hard.
it's really, really hard. And a lot of the, sometimes you can look at it and say, oh, it was the fintech's fault for not doing this. No, there was like there was a series of failures that happened here that probably started years before on
Yep.
both sides. And now you've got people out of jobs, you've got fintechs that are shut down, and you've got investors that lost their money. I mean, thank I don't like to see that happen, but
Oh,
for a long time, many, many years, there was this race to the bottom. And that was, I mean, you and I talked about it a lot, right? How many times did we fight about Robin, you're too difficult, and and we would, kind of go back and forth on it, and I might have been too difficult for anyone who's listening. But I think like that's kind of the correction that we're seeing right now. And
yeah.
it's unfortunately taken out part of the industry.
Now, I agree. Listen, at the end of the day, I think, and there's a lot of blame to be passed around, right? We don't have any shortage of people to be able to say, hey, listen, we could have done better here, right? To be able to make this work. But I think ultimately, and I'm speaking to the fintechs right now, is you have to be able to prioritize compliance in the same way and capacity that you prioritize scalability and revenue generation. Compliance is literally the bedrock of this industry, right? For us to be able to continue to go ahead and move money to other countries, right? To be able to, help people who are here come to America to be able to earn an income and then feed their families back home, to be able to continue to do that, to be able to continue to be able to create, bank accounts and quick money movement opportunities for gig workers. We can't do that without fintech, right? So for us to keep this industry alive and continue to serve the people that we care about, I think those CEOs, those entrepreneurs, they have to really kind of embed compliance into the conversation. Now, what I promised I wouldn't do here on this LinkedIn live session, right, is say, do a lot of selling of our services, right? But I do think it's beneficial for the audience to understand, who we are and really what kind of drives this conversation before we kind of dive into the next topic. So, Bates Group is a compliance consulting organization, right? Robin is one of our consultants on the back end who will work and do a lot of these projects that need to happen, whether it's remediation or building out an AML program or model validation or an independent audit or what have you. However, one thing I think that's very different about us is, we're not the largest consulting company group out there, right? Which I think gives us a little bit of freedom when it comes to some of the projects that we bring on. We have the opportunity to kind of come in and really be flexible when we're working with these entrepreneurs and make sure that we are really kind of giving them a bespoke solution, right, to whatever it is that they need for their bank partnerships. And on the other side of the house, we work with banks as well, right? So if you have banks that are thinking about, hey, how do I go ahead and create some revenue generating opportunities? I want to bring on some of these higher risk clients. We've worked with banks in the past to help create programs that will allow for them to safely do that and be able to scale in a responsible way. So that's my shameless plug, but I just want to make sure everybody understood, why we are having this conversation, because, we definitely believe we can add a lot of value there. All right. So listen, let's kind of jump into the next part, right? So we talked about how fintechs can make themselves, more attractive to banks. I would love to really kind of jump into how banks can do their due diligence in selecting the right type of fintech partner. Ultimately, I think a lot of banks, they see revenue and they say, man, this company thinks they can bring in $50 million in revenue a year and, $5 million in deposits on a monthly basis, right? So obviously this is going to be a good fit for us. But a lot of times, kind of jumping into those partnerships has proved to be detrimental to those banks, and they've had to kind of fall away from this industry because they selected just one wrong partner. So, I have a couple things that I think, really banks should be focusing on. I'd love to kind of get your feedback on it, right? So the first piece of it is, and I talked about this earlier, is does your fintech partner solve a real problem? And is it not just focused on monetization, right? I mentioned that, we're in a world where our consumers expect transparency in some level of social responsibility from our major financial institutions. So if you're going to bring on a fintech partner, one, we want to make sure that those partners are doing the things that really serve the community. Because I think if you're doing that in and of itself is one of those unseen compliance check marks, right? So the other piece of it is alignment with the bank fintech relationship sensitivities. So, you think about, you talked about this earlier, when we were onboarding customers and we're asking them questions and trying to, kind of look behind the hood, a lot of times they're like, oh, I don't want to give you that information. I don't want to show you my financials. I don't want to go through this. I don't want to go through that. But that's because they weren't properly aligned with the idea that a bank needs to know this information in order for you to be a great partner for them, right? And then a fintech that's willing to bring in either experienced leadership or the appropriate advisory support, like a compliance consulting company, to be able to, kind of assist in building these things out, right? So if they don't have the ability to have a full-time headcount for some of these roles, they have at least invested in the resources necessary to be able to bring in, the expertise to make sure that this aspect of their business is fully framed out. So speaking of that piece of it, when you spent your time at some of these previous organizations you were with, what was your thoughts around, whether they had the talent in-house or if they used a consultant to be able to assist with that? Were there any kind of differentiators there? Were you more excited to see when you saw a consultant? What were your thoughts around that?
It really kind of depended on the general ethos of the company. There are a lot of techs that will go out and get a fractional chief compliance officer, and they'll say, check, done, and they'll pay that person, $15,000 a month, and they'll call them when they need them. That is not a good thing. That is, if you're checking that box, it might alleviate a problem today to get you onboarded faster. But in the long run, it's going to backfire on you significantly, because the role of chief compliance officer, the role of compliance manager, all of those leadership functions that have that expertise, whether they're in-house or out of house, is almost irrelevant. The big question is that fintech actually leveraging that resource appropriately and bringing that knowledge in to build their products better, to do the right transaction monitoring, to have the right controls, and then communicate that back to the bank. It is not supposed to be a Band-Aid. It is not supposed to be, like I said, a check mark.
Yep.
So I mean, I think that goes back to like when these fintechs are forming their, their thoughts around their company and who they want to be. They really need to consider, like you said, is compliance a strategy or is it a check mark? And if it's a check
Yeah.
mark, get with the industry, you're not going to be successful here. It's a strategy.
Yeah. Listen, I have a phrase I like to say, comply or die, right? And maybe it feels a little extreme, but if I'm being honest, right? How you can't succeed here if compliance is not embedded within the framework of your operations. It has to be a thought process. I remember when I was working with a fintech that had incredible success, right? And they were working with a third-party BaaS provider. And when they made the decision to walk away from that third-party BaaS provider, they found it incredibly difficult to be able to find a bank partnership. And then when the bank started to express to them what they needed from them, right, on the compliance side of the house, they started to look at what that investment would take from them even though they've been in business for 3 years, right? And they hadn't spent that time because they had a third party company that kind of owned that aspect of it. Once they realized, okay, now I have to invest in this, they found that they needed to kind of restructure everything that they had going on. So I say all the time, like you said, it's not a band-aid. It has to be a frame, part of the fabric of what you're doing. And if it's not a part of the fabric of what you're doing, you're going to hit that roadblock eventually. And once you hit it, 9 times out of 10, from what I've seen, it's almost impossible to cover it, right? So, no, I mean, great insight there. Great insight there. So when I think about banks and picking the right fintech relationship, yes, I always looked at the three pillars, but what I also looked at, I thought was just kind of the excitement of the entrepreneur and what they wanted to do, right? Ultimately, we had these guidelines. It was like, do they have enough employees? Have they raised enough capital? Can they afford our services, right? And while I thought those were check marks that were incredibly important, I didn't know if though that necessarily has sustainability because I saw one program where literally it was a credit card program. They came to market, they were gangbusters. They got thousands of people to be able to sign up very quickly. But when things kind of changed, they immediately pulled the plug on the program. Banks are looking at this as like a 3, 5 year investment, right? So if you have a program that, kind of pulls the plug early on, a year or two in, and then all of a sudden, that investment doesn't necessarily pay out. So yes, look at the compliance side of the house, but as a bank, you also have to be able to look at the long-term growth strategy and really put yourself in the consumer standpoint and say, do I see this program working and being viable in 2 or 3 years? It has to be more than just, that quick sprint to success. Does it have sustainability? I mentioned I started my career in payments, right? So one of the things that was interesting was when I was in the merchant services industry, Square came out with their merchant processing tool, right? And it was a shocker to the industry. Literally, you had this company come in giving merchants free terminals and a rate that, while higher than a lot of the rates that were out there in the industry, was flat, easy for consumers to be able to understand. And they literally flooded the market for years, losing hundreds of millions of dollars just to be able to disrupt the industry. Now, Square, who also owns Cash App, right? Who also, if I'm not mistaken, kind of owns a bank a little bit, right? Kind of, right? Block, right? But at this point in time, what they've done is they've transformed everything. They have their hands in every piece of the pie because they saw the long vision, right? And if I'm thinking of this as a bank partner, and I had a chance to bring on a company like that back then, that was a loss leader, right? But had incredible amounts of funding and had a very clear, focused vision. Would you have wanted to be a part of that loss? so you could be a part of the success? Would you have been willing to be able to take that ride with them? And I think a lot of banks don't know the answer to that question. So, but yeah, I mean, it's very interesting stuff there. Do you have any, kind of stories like that where you've seen, companies kind of come in and it's taken them a little bit of a time to be able to get to where they were going? And, what do you think a bank should be looking at when it comes to that success?
Yeah, I mean, honestly, I think that's a really great anecdote. It's uh, the way I look at it is a long-term strategy for a bank. I think what we've seen in the last year and a half is banks they wanted these massive portfolios of fintechs, which, there is a lot of sound logic in the idea that, 50% of fintechs fail, so you want to have double the amount. I think what it did was it made the programs not sticky, but it also didn't form the depth of partnership that I think is really needed to say, like, hey, this is a 3 to 5 year vision. And so, one of the things that I like to talk about when I talk to banks about fintechs is this a product that you'd offer to your regular customers? Is
There
this
you go.
something you think is worthwhile in the industry? I've
That's
seen a
it.
lot of really stupid products. I mean, products that they look really cool. They've got a cool name. They've got awesome branding. They're backed by,
Yeah.
whoever. You get a pitch deck and you're like, this is the dumbest product I've ever heard, you know? And it's not something that I'm proud to offer. It's not something that I would offer to my bank customers. So I think the most successful partnerships I've actually seen have been these partnerships between banks and fintechs that they say, hey, I don't want the fintech to just be an affiliate marketing partner that hooks up to a middleware provider. I want that fintech partner to be something that I can refer customers from the bank over to. Let's say it's like a
There
fintech
you
with a great
go.
product.
A real partnership.
Yeah, it's a real both ways working partnership. And then you get, 3 to 5 year growth, hopefully, beyond that. I just think that we're past the point in time where this is like I said earlier, a race to the bottom. Just find any bank partner that will take you. Banks taking any fintech that'll get onboarded. That is what the regulators don't want to see. That's what's failed.
Got it. Got it. Listen, I said it earlier in the conversation, and I mean it, right? Banking is fintech, and fintech is banking. So banks, hear me, right? If you're bringing on fintech partners, bring on fintech partners that could be a part of what your vision and what your mission is. So therefore, you guys have an investment in each other, and not just this monetary, handshake, if you would, because the risks are too high, right? The risks are too high to invest your energy, your time, your resources, your good name into something that can only return a revenue generating tool for you. It has to be something that really kind of increases your footprint and speaks to, I think, who you are as an organization. And all banks are different, right? All banks have different goals. Some banks are focused on small business. Some banks are focused on the on community areas. Some banks are focused on, really kind of the wealth of this country, right? And that's fine. All banks have a purpose and a point and a place. But I think when you start to think about these fintechs, don't think about it just as a money tool, right? Think about it as, how can we really kind of increase what we're trying to do? So, Robin, that's excellent. I want to kind of change gears a bit and talk about the conversation that everybody in the world is talking about, right? And that's the impact of AI. So, I think this is one where I want to yield to you a little bit, right? Because I don't actually leverage AI in my daily task outside of, maybe, trying to come up with some talking points or something like that. But what you're starting to see is AI really integrating itself into companies' risk management and compliance, taking advantage of it for operational efficiencies and, things of that sort. So, how have you seen AI impact the compliance world? And what are your thoughts around it?
Well, I think AI in general, and we can, AI sort of this general broad term.
Yeah, well, we'll get a little deeper on it, but yeah, let's talk in
Yeah,
general.
you do a whole thing on AI and, but that's number one question, fintech and bank. You think it's AI, what are you actually bringing on? Ask that question. But AI and quantum computing in particular, that revolution is happening, right? This is a major disruptive event that we're in the middle of. And I don't know about everyone on the call and Jason, I'm getting tired of being disrupted, but I mean, that's it feels like we go every year with the disruption event. But I think, if you listen to the experts and you kind of look at the trends and the information on AI and, this sort of like focus on data and what data can do, what it really is going to revolutionize, and it is revolutionizing what we do, not only in compliance and banking and fintech, but just like generally in the world.
Of course.
And there are, oh, go ahead. Sorry.
No, no, I said, of course. I was just agreeing with you.
But the challenge is, and if we look to let's look beyond the US, because I think there's some other regulatory frameworks that actually might be more informative here. We look to the EU AI Act, which talks about, okay, AI is here. This is what we're doing, but you have to do it responsibly. And it categorizes the types of AIs, the industry, and what it does is it puts together a model governance framework. The model framework is not a new concept. I think it's 2011 and 2013, I can't remember the exact date. The OCC published a paper on model validation. We know how to do model system validation. Bates does model system validation. But we know how to do this. And what's happening with AI is the same thing that's kind of happened with fintech. Is it doesn't look like a duck, but it quacks like a duck. So, we need to take these concepts that we've been applying to other areas of compliance that basically says, if you bring a technology in and it's doing something for you, you need to understand how it works, both from just a general perspective, but also from a risk governance perspective.
Right.
When you onboard it and then you maintain it over time and grow it, when you apply that kind of framework, AI actually becomes easy, right?
So look, I'm not a tech guy, right? So,
Yeah.
my first thought is if a company were to bring in AI to help it with, I don't know, transaction monitoring or fraud detection or, some sort of AML compliance identifying tool, right? My thought process is that tool needs to work in conjunction with human talent, right? Where the human, he leverages that information to be able to extract data, but you still have a human analyzing it. Because if I'm not mistaken, right, AI is only as good as the information you give it, right? It's not as if it can, take the information and be able to do anything other than maybe give you a risk rating or a score. At the end of the day, there has to be some sort of human element on the other side of it, being able to take that information that's being generated and quickly, being determined by the AI to be able to, kind of leverage it. Am I wrong in thinking that the two you need to work together, or can they be mutually exclusive?
That's it. And that's a really good way to describe it, that AI is not replacing compliance. It's not replacing compliance.
Exactly.
What it is it's taking compliance professionals out of the data crunch space, which, let's be honest,
That's a waste of time for them anyway, right?
don't put me in front of a spreadsheet. I don't want to be
Okay.
there. But what AI does, what a good AI does, right, is it takes your data that is in front of you, but it also takes historical data that you have at your institution, and maybe it takes historical data from other institutions, normalizes it, brings it in to, build these sort of predictive models. And what it does, it says, hey, human, you should probably look at this. Or, hey, this is what we think this is. And what it does is it allows compliance people to focus on areas that are truly deserving of that focus, as opposed to, like, we've taken the shotgun approach where we're just buckshot everywhere, right? And we're hoping that we hit something. We know that, our sampling methodologies, gosh, it'd be really great if we could get 3% samples. 3% is fairly a low sample. What if you could get 100%? So what it really is not replacing us. It is allowing us to be better at our jobs and focus on the things that really need to be done.
I agree. Okay. No, listen, I think that's fantastic. So let me ask you this, right? I'm gonna put you in the mind of a fintech owner, okay? And you have this incredible product you need to get to market. You've been working on it for 2 years. You just did your capital raise. You now have your bank partner, and you're trying to solve, everything you need to do pre-launch, right? So you need to have some sort of AML compliance software. Maybe you want to have an AI component. You can't afford necessarily the hundreds of thousands of dollars it would take to bring on, an experienced CCO. You have a little bit of money. How are you spending that money towards compliance and towards technology? How do you prioritize that?
I think, we have to revert back to a risk-based approach, which is
Okay.
that's not inherently what founders do,
They
right?
have.
they they're like, we're going, sometimes we're just gonna, and maybe they do, they just accept the risk. But that's where, like, honestly, having a really good risk analysis of your business, of your customer base, of the type of products and services you're offering, buying the most expensive compliance software out there, getting all of these amazing tools that
Yeah.
are super expensive, you might not need that. And you might be able to take your money and spend it elsewhere. So really understanding through analysis, this is a risk assessment, but I know some people, they don't want to call it a risk assessment, but we're going to
Oh, risk
analyze it.
assessment. I like the word. It's straightforward, right? Do a risk assessment. Figure out what your risks are, and be able to build a program around that. So I'm with you.
And that's how you deploy your money, right? It's not, I think historically we look at a risk assessment as a piece of paper that sits on a desk and we revisit it every year. A risk assessment can actually be a tool you can say, hey, I feel like we don't do international payments, we don't onboard PEPs, we don't do all these high risk things. Maybe I don't need an AI. Yeah, I don't need all of this crazy software. And you mentioned, system. I mean, I've seen really successful fintechs that are low risk, low volume, do it with a spreadsheet. And sometimes, and I want to be really clear, big old, like disclaimer,
Yeah.
I'm saying use a spreadsheet, but I'm saying that, like, sometimes all of those bells and whistles are not required. But in order to fully get to that point, you need to understand where your risks are.
So here's what I heard you. I'm the fintech owner, and I'm trying to figure out what I need, right? Uh, I have I have resources, I have everything else out there, and the compliance piece, I'm trying to solve for that. What I'm hearing from you is start with a risk assessment, right? Have an independent company come in, analyze your program, do an actual risk assessment for you, and then give you advice on how to be able to move forward, right? So leverage expertise of people who are in this industry, who talk to regulators, who have incredible relationships with the banks, who are former CCOs, right? Who maybe in some cases are former regulators. And by the way, guys, I'm talking about Bates Group because this is our team, right? So start with the risk assessment, figure out where you're at, right? And then once you figure out where you're at, build a program accordingly. Don't just go invest in a bunch of technology if you don't even know what you need according to your bank partnership, according to your customer profile, according to your actual risk, right? As far as being in this industry. So no, thank you so much, Robin. That you got exactly where I wanted to go, and I didn't even have to bring you there. So it's very helpful.
I want to make one more point on this,
Yeah, of
just so, like,
course.
everyone can kind of understand this larger context of this. If we look at the consent orders over the last few years, what those consent orders did not say is they didn't have the best transaction monitoring system in the world. I know people at those fintechs, I know people at those banks who are really good systems. They actually
Yeah.
had really good transaction monitoring. It just might not have been appropriate for the institution.
Yeah.
And then, then it didn't get back to the bank. There wasn't an appropriate analysis. I mean, you can have the flashiest system in the entire world. If it is not tuned for you, if it's not set up to have the right outputs to the right places, it doesn't matter. You might as well have had a spreadsheet.
Listen, I like car analogies. I use them all the time. You might have a Bentley, right? And then you have a local mechanic. It doesn't mean that that local mechanic's not good. That local mechanic can actually be a legend in the neighborhood, right? And that Bentley, well, it's a Bentley. If you take that Bentley to the local mechanic, things might not just kind of work out, right? So take a Bentley to a Bentley dealership and let the Bentley folks go ahead and take care of it. So anyway, those are my thoughts around that. So Robin, thank you so much. I mean, AI is a fascinating conversation. It's, I think one of the goals I have this year is really just to kind of learn, more about how, AI is going to be impacting our space, kind of from soups to nuts, right? So it's very exciting, very exciting. So look,
Sure.
I know we're getting to the top of the hour here, so we only have a few minutes left. But one thing that I wanted to do is kind of talk about how when a bank and a fintech do find an appropriate marriage, right? And they say, hey, you know what, we're going to go ahead and do this thing. how do you scale a partnership without compromising compliance? I have a couple of notes here, things that I think are, kind of stand out. And one of them is banks investing in technology-driven compliance solutions. So we talked about, AI and how fintech should be cautious maybe with how they're spending their money. I don't believe the same is true of banks, right? I think banks need to be able to invest as much as they can to be able to see as deep as they can into every transaction that's happening. So if a transaction happens on their platform, and I don't care if it's from their fintech, they need to be able to understand when it happened, how it happened, who did it, the entire gambit, right? So when you think about some of these technology-driven solutions or banks that have not invested in that in the past, maybe even from some of your previous relationships, how do you kind of rank that when it comes to a compliance partnership, or is it even important? Am I wrong when I think about that?
No, you're absolutely right. And actually going back to, sort of, this was completely unintentionally laid the framework with that last comment we were just talking about,
Yeah.
is making sure you have the appropriate technology. The bank does not need to go out and get the most expensive technology for this purpose. What they need to do is understand what is actually needed, do that analysis, see where the gaps are in the holes, and then plug them with the right technology. Because I think, we saw Recon be a major failure last year. The fact that the banks had these essentially slush funds, right? They had FBOs with millions of dollars sitting in them. They didn't know who those funds belonged to. That's not a fintech problem, you guys. That at the end of the day, Recon has been a foundation of banking for a very long time. So, the appropriateness of that was not to go out and get the fanciest, what have you. It's that you just need the data. Whatever format that comes in, it can be an amazing system. Technology, I'm a huge fan. I mean, I think it's the best way to do this, but the core issue truly was they didn't know what was going on. So making sure that you as a bank are assessing if you've got that risk for Recon. Okay? You can have a fintech that doesn't have an FBO account with millions of dollars sitting in it. You probably have different Recon needs than if you had a account base where you had all that money. So making sure that, based on the types of fintechs you're onboarding, the products they're offering, the services, that you've got the right solutions with the right technology in place, that's how you scale.
Yes, yes, yes. Thank you. Look, one thing that I think is important, and I've actually been beating this drum for many, many years, is I do believe that there needs to be some sort of standardized compliance framework that allows an easy path to compliance for potential partnerships. And now I understand it might not be an industry one, right? Because again, we talked about every bank plays a different game, right? They're dealing with different customer base, et cetera. So the risk level is going to be different. But if I am a bank and, I had, a charter and I said, hey, you know what, I'm going to go ahead and open up my bank to some of these riskier accounts. One thing that I would do is work with an experienced team to be able to say, let's create a framework that every partner is going to be able to cross when they come in. And as they grow, we're going to do continuous risk assessments, right? If you hit a certain tier to say, hey, let's go ahead and reevaluate this partner that we brought on so that we can understand what their risk is to our organization and how we need to be able to adjust things, right? I think the trajectory for most fintechs, right, is slow, 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 slow. And then you have this quick arc whenever they finally kind of get that traction. Once that arc happens, their risk to your organization is not the same risk that it was when they started. So if you're not taking a look at that and saying, hey, we now have a company that's increased in production, increased in market size, and has also increased our exposure, let's go ahead and do another risk assessment to go ahead and reevaluate where we're at. If you're not doing that, it's already too late, right? Because, once that money comes in, nobody's going to want to slow that down. So definitely, I would ask you this, right, as a compliance professional yourself, how often do you think banks should be demanding risk assessments from their partners? I know they do audits annually, right? Should a risk assessment be a part of that audit on an annual basis, or should, they just have to, if they hit certain tiers? What are your thoughts around risk assessments?
I think banks should do their own risk assessments. Fintech should have a risk assessment that drives the business and tells the founders or the executives where to spend the money and what the risks are, et cetera. But the bank should also have their own risk assessments. You can't rely on your fintech partner. They're not going to tell you
Of
probably.
course. That's
Um,
that's fair. That's fair, right?
yeah,
So what you're saying is the bank should actually be performing their own risk assessments on their partner fintechs on some sort of standardized basis, right? Whether it's annual, biannual, what have you, they need to be performing those risk assessments because, as you mentioned, even if they're bringing in a third party to be able to perform a risk assessment for them, that's not nobody really wants to expose all of their risk, right, to Big Brother, right?
yeah. And I think, in this case, in this particular case, because we're talking about high risk. So, even risk assessments have a risk-based approach, right? When you
Yep.
decide to do them, often, um, in this case, because you are dealing with a high risk industry that is prone to change very, very quickly,
Yep.
I recommend ongoing risk assessments. So, you want to have KRIs or key risk indicators that you're monitoring on your fintechs on a regular basis. So it probably looks like volumes, not only just in count, but also in, dollar amount. You're looking at, velocity. Do you have that hockey stick we talked about? That is that is the true trajectory of a successful fintech. And I think no one really understands that until you go through it, because fintechs sitting here going, why am I not successful? Why am I not successful? Oh crap, I'm successful.
Yeah. Yeah. Yeah.
So you've got to have a regular process of getting those KRIs, looking at those KRIs, reporting up to your management on those KRIs to say, hey, I think we are starting to change the risk that we associated to the fintech in the beginning. Then you want to have and then that's just like a soft kind of ongoing risk assessment. Your actual risk assessment, your big one, that big 30-page document, that you can do that probably annually, provided there's no significant changes.
Right.
So really, it does come down to risk-based, but you should always, and this is not just with fintech, this is just with banking. You should always have KRIs. You should always be looking at them.
Yeah. Yeah. So one thing that, I want to add to that, and again, I've worked for, a couple of major sponsor banks here in this country. And I think banks who are willing to participate in the space, and I'm not necessarily talking about the larger banks, right? I'm not talking about the ones that have unlimited resources. I'm talking about the ones that may be a little bit revenue challenged. It is a value to have a different set of eyes on your program on a consistent basis. There is value in bringing in consultants. There is value in bringing in experts who have played in the space for, decades, right? To be able to say, hey, listen, here's what we see and here's how we can help you. I think that's really one of the overarching themes that I wanted to cover in this call is that there is value in partnering with experts like yourself and like the rest of our team, the Brandys and the Matts and the Michaels of the world. Our group is incredibly experienced, right? And we're one of many, right? You have some smaller shops out there, you have larger ones, and ultimately, I want to bring awareness to the industry, not necessarily just Bates Group. I do believe whenever we have an opportunity to compete for business, we're going to win it because our team is, I think probably the best in the industry, right? But ultimately, I do think it's important that banks as well as fintech start to really consider, what it means to bring on a consultant, an expert to be able to come in and really kind of help clear up some of these things for them. So listen, we are really kind of through our topics here. I wanted to take a look to see if we had any questions in the chat, and I don't see any questions, but we do still have several viewers. So I wanted to, kind of open it up. If you guys had any questions, we'd be happy to answer them. I know Robin is somebody who has some great insight as she has sat on the other side and been kind of that gatekeeper for the banks. And then, myself as well, I've gone out here and I've hunted for some of these relationships and helped, kind of built some of these programs out. So if you guys have any questions, please feel to chat up. We have a few minutes left and be happy to answer them for you. All right. And Robin, while we kind of wait to see if any questions come in, I'd love to kind of get some of your closing remarks here. It's been a really insightful hour. Is there anything you'd like to kind of leave the audience with before we head off?
Yeah, I think we're in for a fairly small year, which I'm pretty sure I did a webinar at the beginning of last year and I said we're in for a very tumultuous year.
Yeah,
So I think that might just be the statement at this point. But you know, the big thing is that we as banks and we as fintechs and we as consultants, there's a lot of really great framework out there for how to do this right. I think it's important to not get distracted by flashy things, by you know, potential changes in regulation, by all the stuff that's going on, and to kind of stay the course on a risk-based approach through all of this. We know how, as banks, we know how to do risk assessments. We know how to do payments. Don't get distracted. Don't lower your shields. Now is not the time just because we
yeah,
have regulators that may not be looking at it. They'll be back. So
yeah.
we
No,
need
they're not disappearing.
I keep hearing, and I think like we need to look at this industry as we sounds really stupid, but we're all in this together.
We are.
Bad one bad mistake looks bad on all of us. So
Yeah.
we need to stay the course. We need to have good programs, and we need to make sure that we're being responsible in the way that we're doing fintech and banking.
Robin, thank you so much. You touched on something I think is very important. Yes, the administration has made it very clear that things are going to look different. But this industry has made it through, both a Democratic administration as well as a Republican administration, and we have no idea what's next. But what we do know is that regulations and compliance are the bedrock of this industry, right? So we have to do what we need to do to be able to protect it. Um, I have such a passion for fintechs because of, I think really kind of social impact that they have, and the ability to be able to really offer, financial services to any and everyone within this country, right? I think the American dream is almost fueled by fintech, right? So we have to do what we need to do to be able to protect it. You mentioned it. If one of us fall, all of us kind of get hit with it. And it's a negative domino effect throughout the industry. So we need to work together to make sure it can happen. And what I will tell you, if you are listening to this call and you need advice or you need help or you need guidance, a lot of the work that we do is just helping to guide people. Obviously we have services that we can help, with respect to, the independent things that you need for your compliance program. But if you're just looking for guidance or you're looking for, maybe a connection, we have a wealth of experience, and, we're in here to help increase the industry, not just sell a product. So, Robin, thank you so much for your time. This has been fantastic. We're going to try to do this at least once a month, and be able to give insight and feedback to those who are excited to join. But if you are on this live, thank you so much. We truly appreciate it, and thank you so much. We'll have a good. We'll see you next time.
Thanks, everyone.